Warriors rise. Is Ethereum the next cryptocurrency to get sued by the SEC? That's what you can expect from this video today. My name is Coach JB. I am the top health, mindset, and crypto coach in the world. What you believe in your heart, you think in your mind, will eventually become your words and become your reality. If you can see it in your mind, eventually you can hold it right here in your hands. What you repeatedly do gets ingrained in your subconscious mind. What gets ingrained in your subconscious mind becomes an unconscious activity. This is the greatest time in human history, warriors. That's exactly why we created the Warrior Academy, to help you manage into the quantum financial system with access to my portfolio, exit strategy, the best community in the world with over 3,500 warriors the past 3 years that have changed their life. Think about this, warriors. Crypto 2.0, an academy that helps you in what crypto is, how to do it, and an example. 5 calls per week to include 2 leadership calls, our revolutionary 120-day challenge, subconscious mind programming, goal setting, nutrition, and you get to work out with us live daily. There is nothing like it in human history. We created a program that brings everything together to create that balance. This is not about getting rich quick, warriors. It's about getting wealthy mentally, spiritually, and financially for sure. My name is Coach JB. Again, I am the top health, mindset, and crypto coach in the world. It's time to develop your confidence. All right, warriors, so check this out. Man, this is the greatest time in human history. I want you to think about what this for just for a moment. So, like I said, I don't watch other YouTubers. What I do is I research. I try to bring you the macro and microeconomic stuff and the stuff that they're saying. Not that sheep's going to go to the moon or Bitcoin's going to 100,000. That doesn't matter, warriors. You have to think long term. If you do, you'll become very, very wealthy. Listen to me. Listen to what they're saying, warriors. This is all about regulating. It's not about crypto not being here. It's about the fundamental cryptos that will be here for the long term, number one. Number two, which ones will outstand regulation? That's really important. If you look at my portfolio, the majority of my portfolio is fundamental cryptos that I feel are going to survive regulation with my deep banking experience, warriors. So I want you to think about this. Is Ethereum next? So this gentleman that's right here on the screen, we know, and I'm going to break this down for you. We know that he was part of the SEC. He threw the Ripple lawsuit out. Okay. Then he leased to go consult for a cryptocurrency fund. And now we have SEC Gary Gensler, and we'll see the connections. There's some connections coming out with him as well. But think about this, warriors. These guys are working methodically for the internet moment. We are in an internet moment. The ones that our grandparents went through and our parents went through, we are in the internet moment right now. And those who hold on like a tick on a dog and don't get fudded out of this marketplace be some of the richest people in the world. So listen to what they say, and then we're going to take a journey down the path. Is Ethereum the next to be sued by the SEC? Check this out.
Look at just a couple characteristics. Traditional trading has usually gravitated toward a single venue. And we don't see as much of that in what I would say is the digital asset space. Even in the commodity space, physicals move around the globe and the like, but trading has generally, centralized at whether it's the London Metals Exchange or others. And again, you know this better than I do from your commodity days, but here in digital assets, it's very dispersed globally, which makes a single regulatory net much more of a challenge. So I think that's there. And frankly, I think in this marketplace, there were a lot of people who, and I'm just going to say this, thought they could throw a fastball by the regulators and decided that they were going to take their chances of pushing the regulatory envelope with the hope that regulation would come in that direction rather than stay pinned to its traditional, what I would say is fundamentals. But
just like the internet wars, first they resist it, then they sue it and regulate it, then they join it. We're operating in the sue and regulation part, and then they're going to join it, and then the price appreciation is going to be massive. Then it will stabilize like the stock market.
That's, I'm no longer in the seat, but that was my perspective when I was sitting there.
Yeah, I don't know whether the history of baseball ties it to the Wild West. I think it might be, it might have been in upstate New York or something.
Okay, so that comment right there, you have to watch human behavior, warriors. Anybody who understands like emotional intelligence, stuff like that, I don't know if that's the right thing. Like the way people react to each other, these two dudes don't like each other, man. There's something going on here. How he push back on that comment. He's kind of like, it was that's makes no sense. It's not even relevant. And so what he said is kind of like, hey, Jay Clayton, like, shut up, dude. But check this out.
I get the analogy and what you're saying. I do think, though, what you find over the history of finance, and we're seeing it in this field as well, you see certain venues taking leading market shares. Just as the New York Stock Exchange competed with the Philadelphia Stock Exchange in Boston and so forth during the 19th and early 20th century, and then it coalesced more and more and more around the New York Stock Exchange over time.
Well, digitization has driven centralization, which is a fascinating part of now we have digitization, in some ways, what I would say is disaggregating, but at its initial inception, the efficiencies drove centralization in some of these.
Right. But just as we saw with the internet, early days of the internet, you saw loads of competition in the 1990s. And then
boom, key. Just like the internet, you saw loads of competition. And what did they do? They sued and regulated down to a few juggernauts and now dominate the marketplace. And they're the richest people in the world.
And we've seen highly concentration take on after that. And this is just the effect of the economics of networks. Mm-hmm. And that when you can bring two sides of a market together, whether it's related to online retail, that you can bring two sides of the market together, or in this online trading of crypto assets. And if I could say, you use the word digital assets, we already have digital assets. The US dollar, the euro, the yen, and most of the 7,000 public companies are digital, meaning you buy and sell stock and it's digital. You buy and sell bonds, treasury. There's no physical treasury debt any longer. So I tend to call these crypto assets.
I'm happy to go with your terminology. So, but let's talk about that.
Do you see how he keeps throwing shots back at him and like, you don't know what the hell you're talking about? So Gary Gensler's connected deeply. I mean, both of them are, but Jay Clayton, Bill Hinman took off into the crypto space. They wanted to be on the wealth side of it. Gary Gensler wants to be on the wealth side of it as well, but Gary Gensler's coming in to regulate the living shit out of this market. That's why they put him in place, Warriors. He's deep in this, Warriors, coming from MIT. So these guys got in place so they could make a shitload of money. Gary Gensler came in to regulate the crap out of it, but they're all setting themselves up for future wealth.
And those prior evolutions. And part of this conference here today is about surveillance, about bringing market integrity with the concept that without those things, you're not going to have a market that holds up and flourishes.
It won't. We're going to have, and I've said this, but we're going to have a spill in aisle 3, and then the public's going to say, where was the official sector? And the spill in aisle 3 might be a financial stability event because the lending in this space is growing. It's hard to get good facts and figures, but it's probably at least $200 billion in size. The spill in aisle 3 might come around stable coins, so-called stable coins. It's about $140 billion of these coins right now.
Let me interrupt.
This is important. Listen to what he's saying. There's going to be a spill in aisle 3. Do you understand what he's saying right there, Warriors? There's going to be a spill in aisle 3. That means these exchanges may get shut down. DeFi is going to come crashing down. There's going to be a black swan event in your financial system. I bet you the financial sector is going to collapse, and then they're going to bring in who they call the good actors through regulation, and they're going to reconfigure the market to cryptocurrency, blockchain. It's already done, which I'm going to show you. But you have to make sure you're in the right fundamental cryptos, Warriors. Very important.
And the spill in aisle 3 might just come from a lot of the investing public getting hurt, either by fraudsters or by good faith actors who are promoting and raising money, and the investing public didn't, in hindsight, get enough information. At the core of our bargain in the securities markets is investors get to decide what risks they want to take, but the people raising the money, the issuers, should share full and fair disclosure.
Boom. All about regulation wars. They're just setting us up. Black swan event in the financial system. And then what they do is just like the C word is you look this way, whoever creates the problem, creates the reaction, creates a solution. Okay, so let's take a look at this here. So Bill Hinman, digital asset transactions, when the Howie met Gary, right? So this was in 2018. If we go F8, we just type in Ether. So we'll read this right here. So let's see, let's go right here. I want to go to that one spot where I was at. Okay, where are we at? Ethereum. Okay, here we go. So it says right here, applying this disclosure regime of the federal securities law to offer a resale of Bitcoin would seem to add little value. And putting aside the fundraising that accompanied the creation of Ether, based on my understanding of the present state of Ether, the Ethereum network, and its decentralized structure, current offers and sales of Ether are not securities transaction. As with Bitcoin, applying to the disclosure regime of the federal securities laws to current transactions, an Ether would seem to add little value. So that's Bill Hinman. Bill Hinman left the SEC. He consults for Andreessen Horowitz, a $2.2 billion crypto fund, which includes Bitcoin and Ethereum. They just raised more money for cryptocurrency funds, okay? Then you got SEC, Jay Clayton, this gentleman right here, who they're going back and forth in this video right here, okay? We got the SEC, Jay Clayton, confirms ETH is not a security. Jay Clayton, former U.S. SEC chairman, brings high-level market and regulatory experience to Fireblock's advisory board, who is invested in Bitcoin and Ethereum. If we go here to Charles Gasparini, I'd highly recommend you follow him on Twitter. He's a Fox News reporter who is using the XRP Ripple case to really bring some. He's going to have this dude is going to explode when this case gets dropped or settled, right? And he posted yesterday, okay, this is interesting. In March 2020, the SEC posted the following. The commission has also publicly recognized Ethereum as its native currency, Ether, okay? See William Hinman, Director of Division Corporation of Finance, a digital asset transaction, when Howie met Plastic. I just read some of that stuff to you. This is a newer document as well. It says available on the SEC. You can check this out. Now, not only will Gary Gensler not comment on Ether's future, but an SEC lawyer appears to suggest that there's a rethink on ETH as well. So does that mean that there is now a case coming against Ethereum? So is Ripple, okay? So is Ripple the setup for regulation of cryptocurrencies? And then they're going to go after Ethereum. We're going to see, just like the internet, just like you said, there were so many people going into the internet, and then they went in and wiped out all the bad actors who they thought were the bad actors, who got hurt, the investing public, and who are the richest people in the world, the people who were in the internet companies that survived. Think about that, words. Now let's listen to what Gary Gensler says about Ethereum.
He was a gentleman in Florida that put up citrus groves and started to sell them. And the Supreme Court had to decide what is an investment contract, because an investment contract is a security. This 4-part test, in my mind, suggests that most, maybe not all, but most initial coin offerings are securities, because they're investment contracts where there is an exchange of money, there's a common enterprise, you're relying on somebody else's expertise for profits. This is why I've earlier this year said, I think that most of them are. I think Ether, when it was done in 2014, would pass this test. When I say pass, it means it's a security. Now, subsequently, the SEC has said by 2018, it's decentralized enough. And they've sort of said, we'll let it go the other way. But whether it's Ripple or EOS or others that have done big initial coin offerings, when you think about these 4 things, they're probably there. But again, it's less than a quarter of the market. So this is an important debate, but it's not the whole.
Okay, so he said right there that he thought at its inception that Ether was a security, but it didn't report as a security, right? So it's the initial coin offering. Just to make it very clear, what that means is when there's an initial coin offering, when you're investing in a cryptocurrency, okay, you feel that you're invested in the success of the company. Okay, that's really important to understand, Warriors. You're investing in the success of the company. Okay, so let's take a look. I'm the banker guy, right? I understand banking at a deep level. I just want you guys to see this stuff. I mean, this is a type of documents that are coming out. I'm not going to read this document to you, but it's Basel. So this is type of stuff I look at. It's Basel 3, the laws that are changing in banking. We also have LIBOR to SOFR coming up, which is a huge interest rate change, Warriors, which is massive. That's coming up in December. Oh, that's coming up. Holy cow. Then we got December 13th, right? I'm going to talk about that on G Investing in our live today at 11. December 13th is a debt ceiling being raised. But look at this is Basel commitment and bank supervision, consulting document, prudential treatment of cryptocurrency asset exposure. So they're giving them guidance on how to have how to back their riskier assets, right? Banks are allowed to custody your cryptocurrency, Warriors. They're just figuring out how they're going to regulate this. And on the back end, while they're doing this, you don't think they're all communicating on the back end, Warriors? You don't think that JPM Coin launched their own cryptocurrency blockchain? Ethereum's deep in the banking system, Warriors. They are deep in the banking system. XRP is not going anywhere. Ethereum is not going anywhere. Bitcoin is not going anywhere, Warriors. They're not going anywhere. Those top 3 cryptocurrencies are going to be here to stay. I have my thing on Bitcoin. It doesn't matter. It's going to be here. It's a store of value. It's the new gold. That is my opinion. It is a new gold. That's not financial advice, Warriors. XRP is the new bridge for the banking systems, along with a lot of other cryptocurrencies or a lot of other protocols, not specifically cryptocurrencies. You got R3, you got Censure, there's so many connections out there, Warriors. You got to really look at the ISO 20022. We know this stuff, Warriors. I'm showing you stuff that I've showed you a million times. But what you repeatedly do gets ingrained in your subconscious mind. What gets ingrained in your subconscious mind becomes an unconscious activity. Why I repeat the same things and show you the same things is because when somebody's trying to fudge you out, you get emotional and you make emotional decisions. This type of stuff needs to get ingrained in your brain so you do not get fudded out of the marketplace. Remember, never invest more than you can afford to lose, but know what you're investing in, Warriors. That's why we created our Warrior Academy, to give you a foundation to ask questions so you can be around people who are going to support you, know, like, and you trust. Okay, U.S. patent. We know that Bank of America, a system includes a device with procedures in configuring and receiving the set of data elements and to obtain encryption keys for memory. The processor further configures encrypted to the first set of data elements using encrypted keys to enable the first set of encrypted data elements with first block and blockchain. This is basically the cryptocurrency patent for Bank of America. We know that Ripple is in that. JP Morgan has their own digital currency. JP Morgan's wealthy clients can trade 24/7. Also, Wells Fargo's clients can trade 24/7 on distributed ledger technology. Bank of America clients, all the wealthy clients can move money at the speed of light. But people who really need to move money at the speed of light for cross-border payments and financial inclusion have to wait for regulation until they control the system and get you on a CBDC, and the rich are really rich and the poor are really poor, and there's no middle class. Let's go. Okay. So this is Citibank right here. This is March 18th. March 18th, excuse me, is a document from Citi. Citi, if you want to take a look at this Citigroup document. What is Ripple? They have a whole section on Ripple. It talks about XRP trading volume. Ripple generated considerable attention in 2017, early 2018 due to its price action, but its importance is differentiated. It's 2 components. It's a native cryptocurrency XRP that can be traded and the transaction protocol RTXP and RTGS, a payment system. Ripple XRP improves upon Bitcoin by doing away with mining with its energy intensiveness. Ripple does this through a technical called consensus. I talked about consensus, which is a way for the entire network to agree in the current state of blockchain, even though they don't trust each or any central authority. This is achieved via validating nodes, agreeing in specific subsets, and transactions using alternative processes until a supreme majority of peers agree in the same transaction. SRP, this talks about price movement. XRP differs from other crypto assets as it is designed for optimum speed and processing. Okay. Wells Fargo, the investment rationales for cryptocurrency. They break it all down. And this is the interpretive letter from the OCC. Warriors. I can break this down for you guys. I know I'm repeating a lot of the same things, and I'll continue to do that. Like I said, I'm not looking for likes and comments and follows. I'm looking to reprogram the subconscious mind of the normal everyday people so you can get involved in the biggest shift in generational wealth and your financial history. I love you guys. I appreciate you. Everything's down in the description down below in this video to join the Academy, the free Discord, and Facebook group. Warriors, rise, get your shit together. Let's go.